Hey guys, Spartan from SpartanTrading.com. I want to hit you guys with a quick educational video this week, and I want to talk about today bear market rallies. What are they? Why do they matter? How can we recognize when they're occurring? And then how can we take advantage of them? Now, right now we are in a bear market. Market's been selling off. If you look at tech, that's been in a bear market for quite some time, and that's been absolutely getting hammered. Anything high PE essentially is in a bear market as well. And that's mainly due to interest rates, of course, of a lot of the geopolitical issues that are going on in the world. Inflation, all this stuff is adding or causing selling pressure on the markets. Now, bear market rallies, what are they? It's exactly what it sounds like. It's a rally or push to the upside during a bear market. Now, what we want to look for to recognize a bear market rally essentially is when the market is extended to the downside on the daily. And let's just pop this chart up here. We'll take a look at this. When the market is extended to the downside on the daily, away from its moving averages, away from its trend line, away from its mean, we're looking for the market to return to that level once that extension does get big enough. That's how we can recognize when a bear market rally is likely to occur. The bigger the extension, the more likely we are to return to that mean or fill that gap to that EMA or moving average. The more likely we're going to have a bear market rally, within that maybe short time period, which could be a day, could be multiple days, etc., etc. In this case, we were extended to the downside quite a bit today. We had a decent amount of room to move to the upside, and because of that extension in the pre-market, I was looking at the market on the gap down. I was looking for, okay, we're probably going to rally out the gate, fill the gap, and then I'll look for it to roll over. Bear market rallies are just rallies within that downtrend channel to the upside. Now, they don't mean that there's going to be a reversal in the market by any means, but they are rallies that you can take advantage of on both sides. I mean, you can take advantage of them by going long, of course, when that bear market rally does occur. Now, when they do occur, they're fairly violent, they're fairly fast. You don't want to try to pick tops if you're trying to short that rally to the upside. Instead, what you want to do is obviously ride it to the upside. Wait for your charts intraday to start turning back below trends, uptrends, and breaking back below EMA supports to get back into your position short or start grabbing puts, etc. I like to look for extensions to the upside when that rally does occur to indicate when that bear market rally is probably over and when I should actually start buying puts on individual names. If I'm looking at the market, I'm looking for that extension to be filled at that area. Today it was 396 area. It's actually 396 like 15 or 396.16. We ended up getting into what? 395.80, which was fairly close. So given the amount of range on the chart, we decided to exit most of our long positions there when we saw that occur. So bear market rallies, how can we recognize when they occur? When we have those extensions to the downside that happen and are very defined, very pronounced, and it looks like that you're going to need some sort of bounce in the short term because it's very hard for the market to stay extended for that long. Also, we want to make sure that we're watching the morning. We're likely to see a bear market rally if we see head fakes to the downside after we see an extension, aka we get a pull to the downside like we did today, and the market ended up holding its support or that pivot and pushing back to the upside. This is where they're trapping shorts. They're actually adding fuel to the fire for that squeeze to the upside there. So keep an eye on that. When the bear market rally is over, you can look to take it short. Look for that gap fill on the daily on the market, whether it's the SPY or the Qs you're looking at. You can also watch the VIX to see those support ranges being held on the daily or intraday. That can give you a nice indication, as well as obviously uptrends breaking, etc. So you get moves like, Shop today, which had a massive move to the upside, Tesla today, Dash, etc., etc. The really nice thing about bear market rallies, guys, is when they do start to occur, if you're early enough on them, which you want to be because they do happen very quickly and they're over fast, you're going to get yourself into positions that have a lot of range back to the upside, especially on the option side. Options are going to be fairly cheap at that point in time. On the call side, there's not going to be any premiums on them. It makes sense to go after those calls, roll it until it stops working. You will get 1,000% trades. For instance, we did this on Shop, and we also did this on Dash today. We figured that they both had quite a bit of room to the upside, into EMA supports to retest, fill those gaps, and they both did push nicely, and we ended up getting a 2,000% trade on Shop because of it. We rolled into the 420s. Those ended up going up 1,000%. We rolled into the 440s. Those ended up not working, but it was a small loss, given the risk reward, obviously. And then Dash, same thing. We had the 65 calls, which ended up going up 1,000%, and we rolled into the 75s, which worked okay. But, they didn't get a ton of follow through. Eventually, it's going to fail. Anyways, that's a bear market rally. That's how it works, guys. This is how you can take advantage of it and recognize it. Fairly simple. Look at the charts every single morning when we're in a bear market. See if we're very extended. If we are, we're likely to get that sort of bounce. It has to be very pronounced, very defined. And again, they're over, just as fast as they do start. So in and out, the faster you can get in, the better, obviously, risk reward you're going to be presented with and the better position you're going to be in. Anyways, guys, thanks for watching. Any questions, go to SpartanTrading.com. Otherwise, you guys have a great rest of your day, and we'll talk to you later. See ya.